U.S. Treasury claims power over every crypto trade. On the same day, $59.3 million exits ETH ETFs and Bitcoin stalls at 117.8K. Next candle, breakout or breakdown. Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is August 17th, 2025. I am Nova.
I am Satoshi.
First up, and this is pretty significant, is the U.S. Treasury. They're proposing much broader oversight for crypto. Deputy Secretary 𝗶 𝗔𝗽𝗽 laid out this plan, basically penalizing any crypto platform anywhere in the world if they deal with sanctioned groups. Doesn't even matter if they have a direct U.S. link or not.
Wow, so the U.S. acting as a sort of global crypto cop.
Exactly. That's a good way to put it. A de facto financial policeman. And it specifically calls out U.S.-issued stablecoins, wherever they are. Now, for you listening, this isn't just abstract policy. It likely means higher compliance costs for platforms.
Which could mean higher fees or fewer services down the line.
Potentially, yeah. It adds complexity.
Okay, that sounds like tightening the screws.
Yeah.
But then there's this SEC Project Crypto we're hearing about. Is that different?
It is, actually, a bit of a contrast. SEC Chair Paul Atkins seems to be signaling maybe a more crypto-friendly direction. They're talking about mobilizing to look at really old financial rules. Some are 90 years old.
90 years. So applying horse and buggy rules to, spaceships.
Sort of, yeah. Especially around custody, how digital assets are held securely. It's just different. So while Treasury might raise costs, the SEC move. That could bring clarity. And regulatory clarity is, generally bullish, especially for big institutions. Oh, and briefly, that Trump-Putin summit. Pretty much status quo. No big shocks there for risk assets like crypto.
Got it. So policy is one big piece. But let's zoom in now on the crypto world itself. What are the key moves happening within the industry?
Well, we saw the Ethereum ETFs have their first day of net outflows recently. That was after 8 straight days of money coming in. About $59.3 million came out.
So is that a bad sign? A reversal?
Probably not. It looks more like just a pause, honestly. I mean, Ethereum ETFs pulled in a massive $6 billion in net inflows over the past month. That's still way ahead of Bitcoin funds lately, so context matters here.
Right, context is key. Now, here's something that sounds really interesting. The U.S. Federal Reserve ending its novel activities program for crypto banks. What exactly was that program? And why is stopping it a big deal?
Okay, so this program basically treated crypto stuff at banks as inherently risky, kind of experimental, special supervision. Ending it means crypto activities will now just fall under the standard bank supervision process.
So it's like crypto is graduating, becoming more mainstream in the eyes of regulators.
Exactly. It signals an improved understanding, a maturation of crypto, as the regulators see it. This really lowers the hurdles for traditional banks wanting to offer crypto services. It helps integrate it all.
And speaking of banks getting involved, Citigroup, they seem to be jumping right in, exploring stablecoins in custody.
Yes, and that's a perfect example of this trend. Citi's looking into custody services, specifically for the assets backing stablecoins. They're also piloting payment systems using stablecoins.
So connecting the dots,
yeah,
easier regulation, big players like Citi getting interested.
It's a really positive signal. As the rules get clearer, you see these established giants moving in. Citi alone exploring this could mean potentially billions in new capital for the crypto space eventually.
Okay, let's bring it all together. What does all this mean for you right now? The market tone is steady, maybe slightly up, low volatility, tentatively optimistic, seems fair, definitely consolidating.
I think that's right. The near-term outlook is, cautiously optimistic. People expect easier money policy from the Fed, and this regulatory clarity helps, this consolidation. It means the market's kind of finding its footing. Institutions seem to be getting more comfortable, but, risks are still there. That Treasury enforcement plan is a big one, geopolitics too. So the market will likely stay in this range for a bit, but it could still react sharply to unexpected news.
Right. So the takeaway, even though things feel calm on the surface, there are these powerful forces at play, big institutions leaning in, but also this global regulatory reach expanding. It just means staying informed, managing your risk. That's absolutely crucial. Keep watching these price ranges for any breakout or breakdown. That can tell us where we're heading next. And that's our deep dive for today. Thanks so much for joining us. In a space moving this fast, being informed really is your best tool. Stay curious and stay prepared. You've seen the crypto headlines. Now get the signals that impact your holdings. Money.ai scans 1.3 million signals a day, from token prices to Twitter sentiment, and gives you one personalized briefing. No hype, no noise, just your crypto edge. Download Money.ai. Stay ahead.